when it comes to the decision, you're not making the decision in a vacuum. You don't normally know that, you could be at year 14 and think you have one more year in your roof, but your roof might have 3 more years, or it might have 5 more years, or two, or one, right? Like you're never really sure about that. So there's another kind of like component to this. You want to tell us about it before I share those numbers?
Yeah, absolutely. Right. They talk about how it's not timing the market, it's time in the market. And that adage holds true for a number of different markets, right? More traditional asset classes like stocks, bonds, things of that nature, right? And also rental properties. You're not trying to time when something really positive is going to happen or when something really negative is going to happen. Is the reason is because for most things you can't. And so what you end up doing is making lower returns on investment and not seeing the fruits of a really solid investment strategy when you really try to be Nostradamus and when to time things out. So when things go wrong on a roof, there's no way you could time that out, right? You could maybe have a general idea that maybe a roof needs to be reevaluated, later in the life cycle, call it 10 years, 15 years, 20, 25 years, somewhere around there. But there's no way that you're going to know with pinpoint accuracy when that roof is going to fail. So this idea, even if you could pinpoint it, by the way, let's say the roof costs $7,000, we just showed that you're really making 30 grand in year 14, 32 grand. Even if you could pinpoint it, you're making $25,000 on that trade by holding that asset. But oh, by the way, you can't pinpoint it because nobody knows exactly when bad things happen. So it makes this idea of selling because I know something is going to break even less sound because you don't know. So I started to put some numbers together for how much money am I leaving on the table if I'm wrong about the maintenance item.
But first, we got to give a little bit of advice here, right, GC?
Yeah, absolutely. Just a call to everybody before you think about actually putting your money with any financial institution. Make sure you do your own due diligence. I'm going to be sharing some numbers here. And, of course, these are estimates and are not guaranteed. And you should do your own due diligence. There's different ways of calculating different returns on investment. This is the one that makes the most sense and is generally accepted. But above all, we're not a financial advisor. We're not offering financial advice and or planning. And with that, let's get into it. So if you miss when you think that maintenance item is going to happen by 1 year, you're leaving $34,000 on the table. If you miss it by 2 years, you're leaving $68,000 on the table. And let's just say that you miss it by all 3 years, which is very, very possible. You're leaving over $100,000 on the table from this one rental property because you wanted to get out in front of potentially saving $7,000 on a roof that you had a hunch might go bad. Does that seem like a sound investment to you, Pops?
I don't know if I would call it an investment. I think it would be a decision based on risk and reward. And what I see here is I can try to predict something to like avoid some kind of risk, but number one, it feels like I am risking too much upside here and the things that I benefit from based on the reward that I would get from taking 7 grand off the table.
Absolutely. We have to be able to put ourselves in a different place into year 15, let's say.
Yeah.
When you own a rental property today, it's largely break even on cash flow. We've talked about this openly for years now, right? You're not getting rich because of net rental income, right? But what you're doing is you're creating an asset that over time is going to grow so that the cash flow is there when you need it, right? If we're talking about potentially selling a property because in 15 years you think a maintenance cost is coming your way, it makes even less sense when you put yourself into the financials of how this rental property is going to look in year 15, right? We just looked and you're making $4,500 to maybe $6,000 in net rental income in years 14, 15, 16, right? 4,500 in year 14, 5,200 in year 15, 6,000 in year 16. So it should even get more obvious that you can handle the cash flow swings of a major maintenance item when you have, call it an average of maybe $5,000 in net rental income coming in that year, right? So to me, there are many, many levels to why it doesn't make sense to actually having a strategy of selling before a major maintenance item comes through. Number one, I fully understand how much money I'm earning on my rental property as I hold them, to a length of whenever this major maintenance item may happen. As I hold them to that year, I have a visibility and understanding of how much money that asset is truly making me every year through all 5 profit centers. And I'm making way more than what that potential roof is going to cost me. But even if it didn't, I know that I can't time out when that's going to happen. So it's really, call it like maybe a 3-year window of my potential loss that I would be giving up just to potentially give up or potentially avoid this maintenance item. And that's the mentality breaks down probably at step 1 there, when you understand how much money you're making each year in year 14, 15, 16. But it really breaks down when you realize that you can't time these things. And, the amount of money that you're leaving on the table by being 1 year, 2 year, or 3 years off, it should be staggering to all of you. We're talking $50,000, $100,000 you're leaving on the table to potentially, avoid a maintenance item. I always screw up the cliches. We're stepping over the dollars to pick up the dimes. Did I nail that one?
Stepping over the dollars to pick up. Yeah, I thought it was something like, if you want to get a good look at a T-bone, it's something about a cow. Yeah, I think you got that.
Oh man, gotta love Chris Farley.
Gotta love Tommy Boy. All right, GC. Well,